Acquisitions and asset management are two of the most popular career paths on the principal or ownership side of the commercial real estate industry. But even though these both tend to be some of the most desirable jobs for new entrants into the business, these are two very different career paths built for very different people. I personally spent several years in both acquisitions and asset management roles, and while I learned a lot in each of these experiences, these jobs were also extremely different from one another as far as what each offered from an experience and career growth perspective and what each required on a day-to-day basis. So if you feel sold already on a career in commercial real estate and you know you want to work on the investment side of the business, but you're still not exactly sure which career path you want to focus on most, in this video we'll cover the main differences between a career in real estate acquisitions and a career in real estate asset management, some of the biggest pros and cons of going each route, and where you might fit in best based on who you are and what you want to accomplish in your own career long term. So as much as people don't like talking about this subject, one of the most important factors when choosing a career path is the income potential that each path offers. So let's start this video out jumping straight into pay levels. And when comparing careers in acquisitions and asset management, acquisitions careers tend to involve a higher level of risk but with a very high income potential, while asset management roles tend to involve a significantly lower level of risk, but this also usually comes along with a slightly lower income ceiling in most AM roles. If you were to ask most industry professionals who were around during the great financial crisis in 2008 who was cut first when layoffs in the industry started to happen, these people will almost universally tell you that their peers in acquisitions were the first to get the boot. When capital dries up, whether that means equity investors are backing out of the market or lenders are moving to the sidelines, the need for acquisitions professionals can also dry up very, very quickly. And at times like these, an acquisitions team becomes extremely expensive overhead and a very easy target when a company's headcount needs to be reduced. Asset management roles, on the other hand, are often the most critical jobs during a down market, since these are going to be the people responsible for working on things like lease modifications with struggling commercial tenants, communication with equity investors and lenders to manage expectations or restructure terms when times get tough, and determining the optimal time to sell or refinance an asset to maximize returns or even minimize loss on struggling deals in the company's portfolio. However, just like in any other investment vehicle, lower volatility often comes with lower upside, and acquisitions professionals can often generate materially higher compensation packages, especially when factoring in a variable compensation component. As I mentioned a lot on this channel, income potential in commercial real estate tends to be highly correlated with the amount of revenue an individual can generate within a company, and with acquisition fees often being a significant source of revenue for private equity firms, and things like asset management fees, construction management fees, and even promoted interest all being heavily reliant upon getting deals into the portfolio in the first place. Acquisitions professionals tend to be highly incentivized financially to buy as many deals as they can, assuming they can buy those properties at attractive pricing. And while an asset management team can do a lot to drive NOI and maximize sale proceeds at the end of a hold period, a significant amount of deal performance is usually going to be attributable to macroeconomic factors which are out of the asset manager's control, and less fee income tends to be generated overall as a direct result of an asset manager's actions. One exception to this rule is a leasing override fee, where some firms will take a percentage of the total contractual base rent owed on all new leases signed during the company's ownership period, and more senior asset management professionals can often participate in a portion of these fees, but for the most part, especially within more junior level positions, acquisitions roles are generally going to offer higher all-in pay than asset management positions at a similar level of seniority. Now, aside from differences in risk levels and pay levels, both of these career paths involve interacting with and managing people, but the types of people you work with in each of these disciplines also tends to be significantly different. Day-to-day interactions for asset managers generally involve communication with commercial tenants, property management teams, construction management teams, third-party vendors, and often debt and equity partners on a deal, with a mix of operations management and reporting responsibilities taking up the majority of an asset manager's time. But for acquisitions professionals, the vast majority of their time is going to be spent on deal sourcing and business development through activities like interacting with brokers and sellers, touring potential acquisitions and comparable properties, hiring and managing third parties that can help with due diligence, and working with title companies to close on transactions. In an asset management role, you tend to have to wear multiple different hats, managing compensation levels, deadlines, and incentives for both internal and external teams, but you're also often going to be responsible for managing investor expectations as well, serving as the firm's direct source of communication with capital partners on the portfolio. However, in an acquisitions role, your responsibilities are generally going to be centered almost exclusively around business development and sales, with a focus on activities like convincing brokers and sellers that you can and will close on deals, selling equity investors or internal investment committees on the attractiveness of a given investment, and ultimately making sure that the deals you do put under contract end up making it to the finish line and close on time. Acquisitions is a lot more about selling, whether you're selling to potential equity partners, lenders, or even convincing brokers that you can perform, while asset management is a lot more about managing expectations and the actions of people over a sustained period of time, making sure that investors and lenders feel confident in their decision to place capital with your firm, while the teams you manage feel empowered and incentivized to push your business plan forward. Now, lastly, one of the biggest differences between acquisitions and asset management is the personality type that tends to be the happiest within each discipline, with acquisitions professionals usually being drawn to what's referred to as the thrill of the kill, and asset management professionals often considering themselves optimizers that like to see a project through to completion. Especially at bigger companies, the acquisitions team tends to be pretty far removed from deals after they've been transitioned into the portfolio, and the vast majority of the day-to-day tasks of an acquisition professional are going to be focused on underwriting and touring new deals, submitting offers on potential acquisitions, and negotiating contracts rather than working on implementing the business plans that they may have initially mapped out. But on the asset management side, you really have the opportunity to maximize the performance of an asset and improve a property over time, whether that's through managing renovations and major capital projects, materially increasing rents or reducing recurring operating expenses, or making major leasing, financing, or sale decisions that maximize returns or minimize risk for investors in the deal. People that love to constantly work on new projects tend to feel bored and complacent in asset management roles, since these positions primarily involve a lot of blocking and tackling on a regular basis, but natural operators that enjoy project management and process optimization usually end up with some sort of an empty feeling working in acquisitions, not wanting to hand off a deal completely when the real work is just getting started. At the end of the day, both career paths can give you valuable experience in the industry, especially if you're looking to build your own real estate portfolio in the future, but there are definitely certain personality types that tend to excel in one path over the other, and I hope this is helpful if you're trying to decide between these two paths and where you might fit in best. And if you want to make sure you have the technical skills you'll need to land a job in acquisitions, asset management, or any other analytical role in commercial real estate, as always, make sure to check out our all-in-one membership training platform, Break Into CRE Academy. A membership to the Academy will give you instant access to over 120 hours of video training on real estate financial modeling and analysis. You'll get access to hundreds of practice Excel interview exam questions, sample acquisition case studies, and you'll also get access to the Break Into CRE Analyst Certification Exam, which covers topics like real estate pro forma and development modeling, commercial real estate lease modeling, equity waterfall modeling, and many other real estate financial analysis concepts that will help you prove to employers that you have what it takes to tackle the responsibilities of an analyst or associate at a top real estate firm. And if you like this video and want to see more content on this channel on different commercial real estate career paths, make sure to hit the like button and let me know. And let me know in the comments if you're looking to break into acquisitions or asset management and why you're leaning one way over another. As always, thanks so much for watching, guys. I hope you found this helpful. Subscribe to the channel if you haven't already to see more videos like this every single week, and I'll see you in the next video.